Our next guest co-authored a piece for Slate calling these celebrity endorsements a quote-unquote moral disaster. That's direct. Joining us now is actor Ben McKenzie of the OC fame and the New Republic staff writer Jacob Silverman. Gentlemen, great to have you both. Ben, first of all, I want to say that the EP of this show, Heather Gaines, is a huge fan, so she's very happy to see you on the show. Why are you so anti celebrities endorsing crypto? I mean, it is possible that they believe in the venture, and you know, if it's labeled paid advertisement, it's no different from shilling anything else out there, whether it be a sweater or a home appliance.
Well, you know, I guess I beg to differ. You know, at the end of the day, when you're shilling a sweater or a home appliance, that's a product, a good or a service. What are cryptocurrencies? They're not actually currencies, of course, because they don't operate like currencies. They are a poor medium of exchange, a poor unit of account, a poor store of value. So what are they? Well, people are putting in real money and they're hoping to make a profit off of it. That sounds like an investment vehicle to me, and an unregulated and unlicensed investment vehicle. I think these cryptocurrencies are securities, but they're unlicensed, they're unregistered, and they're traded on unlicensed and unregistered exchanges. So you can see where this is heading. There's just, you know, it's ripe for manipulation and fraud. And I'm worried that a lot of regular people could lose their shirts if eventually the crypto market goes boom. Yeah,
and there's certainly a lot of rug pulls out there, Jacob, as we've seen time and time again. And it's not just celebrities. I mean, it's celebrities of all ilks. There are finfluencers also. I mean, somebody on TikTok can have 2.3 million followers, for instance, and shill a coin or real estate in the metaverse. So how do you stop this? What's your solution?
Well, I think we need to start figuring out whether these tokens and other products are securities and how they really should be regulated. But I think there's a lot of room for Congress to pass fair laws, for the SEC to start doing some enforcement, and also for hopefully people in the industry to start looking at some of the bad actors and some of the poor consequences of the crypto boom. For example, there have been about $12 billion lost in DeFi scams this year. That's a lot of money. And that is something that could be solved perhaps by better regulation, but it also needs to come from the industry taking a hard look at its practices.
I mean, Ben, you don't mince words about this. I mean, do you think Kim Kardashian should be ashamed of herself, for instance?
I think she should do her due diligence. You know, my suspicion is that Kim Kardashian, I have no reason to believe she knew that Ethereum Max, the crypto that she shilled for, you know, was going to crash and people are going to lose, you know, whatever money they put in. But, you know, as celebrities, like, think about the repercussions of what you're doing. It may not be illegal, but what you're doing is you're taking your fans, your followers from social media, and you're, you know, they lose money because of stuff that you're promoting. It's a little different, I would argue, than selling them a sweater or car insurance or what have you. I think that, you know, celebrities should do their due diligence. And then to get to the root of the problem and to get back to what I was saying before, we need laws and we need regulations and we need guardrails. You know, Jacob and I have talked to an awful lot of people who have invested an enormous amount of their personal net worth in these cryptocurrencies. I hope they're aware of the risks involved, but I fear they may not be.
Yeah, and Jacob, of course, this year was a historic year when it comes to the involvement of the retail investor in cryptocurrencies. So maybe this problem is even more acute this year. The SEC has looked into finfluencers. Do you think they should expand their reach?
Absolutely. I think the SEC has a lot on its plate, from investigating some of these crypto exchanges, some of the more suspect stablecoin companies, and some of the crypto banks. But there's a lot of work to do, I think, also to examine the online markets, especially of information, and how there are information campaigns that go on Twitter and other social media platforms, how they're pump and dump schemes every week on Binance and other big platforms. There's a lot of manipulation out there. And when the prices of these digital assets are often related to simply hype and influencers and celebrities talking about them on Twitter or wherever else, or TikTok, that's a real problem. That means that you have a lot of volatility and a lot of price action and volume that's really just dependent on word of mouth and hype.
We got like 15 seconds, Ben, but you're not shilling anything, are you, these days? Have you been asked?
Yeah, Jacob's been approached. Jacob makes himself a little more available on social media. Yeah, Jacob and I are thinking about launching an NFT collection. We're joking.
We hope you'll come on and tell us all about it. Thanks, guys. Ben McKenzie, Jacob Silverman.